Richard Dennis reportedly turned roughly $400 of trading capital into more than $200 million. Traders called him the Prince of the Pit. Then he tried something even more radical. In 1983, Dennis and William Eckhart trained 23 complete beginners for just 2 weeks and handed them trading capital. The group became the Turtles, and public accounts credit them with roughly $175 million in aggregate profits. Their method was not a secret prediction tool. It waited for price to prove a trend, cut failed breakouts quickly, and held the rare move that kept going. Today, we will rebuild those core rules on Bitcoin, directly on TradingView. We will use the core System 1 rules, a daily chart, a 20-day breakout entry, volatility-based N, a 2N protective stop, half-N additions, and a 10-day exit. The full Turtle program also included portfolio limits and a previous breakout filter, which we are not pretending to reproduce here. Open TradingView, choose Custom Binance, and set the chart to 1 day. Daily matters. Copying these rules onto a 5-minute chart creates a different strategy. Click Indicators and add Donchian channels. Set the length to 20. The upper band is the highest high of the previous 20 days, the lower band is the lowest low. We use yesterday's completed channel, so there is no look ahead. Add average true range and change the length from 14 to 20. TradingView's default RMA smoothing matches the published N recursion after initialization, 19 parts of yesterday's N, and 1 part of today's true range. For exits, add a second Donchian channel with length 10, or simply track the prior 10-day low for a long and the prior 10-day high for a short. Make entry lines blue and exit lines amber so the chart reads instantly. Entry is mechanical. Buy 1 unit the moment price trades above the previous 20-day high. Sell short below the previous 20-day low. The original rules did not wait for the daily close. You may test a closing confirmation, but that becomes a new rule, not the original one. Now pause on February 7, 2024. Bitcoin's previous 20-day high was about $43,882. Price traded through it. That is the long trigger. Not because the news looked good, but because the breakout actually happened. The 20-day N was about $1,460. A 2N stop sat roughly $2,920 below entry, near $40,962. The published system sized 1 unit so a 1N move represented 1% of equity. A conservative adaptation can choose total dollar risk first, then divide it by the 2N stop distance. If price moves half an N in your favor, add the second unit. Add again at each half-N interval, up to 4 units. Here those levels were approximately 44,612, 45,343, and 46,073. Each addition lifts the common stop by half an N. Never add to a losing position. Then comes the part most traders find difficult, doing almost nothing. There is no fixed take profit at 1 or 2R. As Bitcoin trends higher, the 10-day exit trails underneath price. Small pullbacks are tolerated. The system is designed to let one large trend pay for many small failed breakouts. On March 17, Bitcoin traded through the prior 10-day low near 64,780, closing the position. The first unit's move was roughly 7 times its initial 2N risk before fees and slippage. That is one historical example, not a promise and not a complete backtest. A rule only looks honest when we show the loss. On September 17, 2025, Bitcoin broke the 20-day high near 116,964. N was about 2,549, so the 2N stop sat near 111,867. 5 days later, price hit that stop. No averaging down. No moving the stop because the market might come back. One plan loss, then flat. This is the cost of waiting for the next real trend. The turtle edge was not a magical indicator. It was asymmetry, predefined small losses, consistent position sizing, and uncapped winners. That also means losing streaks are normal. A market trapped in a range can trigger several false breakouts before a trend appears. Before every trade, answer 6 questions. Is this the daily chart? Is the breakout based on completed prior bars? What is ATR 20? Where is the 2N stop? What position size matches my risk? And where is the 10-day exit? If one answer is missing, there is no trade. For crypto, test fees, slippage, perpetual funding, and 24/7 differences between exchange feeds. Test both long and short rules over many market regimes. Do not judge the system from the two examples in this video. That is the core turtle method rebuilt on TradingView: breakout, size by volatility, cut the failed trade, and let the trend decide the profit. This is educational, not personal financial advice. Trade smaller than your ego wants, and test every rule before risking money.